Welcome to the Deep Dive, your ultimate shortcut to being truly well-informed. Today, we're cutting through the noise and diving deep into GLP's second quarter 2025 results. This is where we sift through the earnings call, the reports, all the data, really, to extract the most important nuggets of knowledge for you.
That's right. And GLP, well, they've continued to demonstrate, I think, remarkable resilience, some real positive momentum in what's still a pretty volatile global macro environment.
Definitely volatile.
So yeah, our mission today is to peel back the layers on their key financial numbers, understand the strategic moves they're making, and really uncover what all of this means for their trajectory and, ultimately for you, our listener, who wants to stay ahead of the curve.
Okay, so let's kick things off with that overall snapshot then. When you look at GLP's Q2 performance, what are the headline numbers that, truly leap out?
Well, the undeniable star of the show for Q2, I'd say, is Group EBITDA. It soared to 840 million euros.
840 million.
Yeah, and that's a significant 25% increase just quarter on quarter.
Right.
And this isn't just a number. It's a powerful indicator of robust operating performances across every single one of their business units. Seeing that kind of jump in just one quarter, especially given the external landscape, is genuinely impressive.
Right. And what about production? That's always a critical barometer for an energy giant like GLP. Did they maintain their output levels?
Absolutely. Production held strong at 113,000 barrels per day.
Okay.
And this reflects really excellent fleet availability, largely due to a low concentration of planned maintenance activities during the quarter and, crucially, very limited unplanned disruptions.
So things ran smoothly.
Pretty much. It speaks volumes about the efficiency and, the reliability of their operational execution. It's not just about the volume itself, it's about the underlying stability that allowed them to achieve it.
Those are definitely compelling top-line figures. But to truly understand the resilience we're seeing, we need to peel back the layers, pinpoint exactly where that strength originated. Let's start by drilling down into the financials, maybe segment by segment, beginning with Upstream.
Right. So Upstream, what's truly remarkable here is that its EBITDA actually increased quarter on quarter.
Increased, even with falling oil prices.
Exactly. It reached 43 million euros, even as Brent crude fell 10% and the dollar significantly depreciated against the euro.
That's counterintuitive. How?
Well, it's not just about efficiency. It really underscores their, let's say, unique portfolio resilience. GLP's Upstream assets maintained a remarkably low operating breakeven. We're talking under $20 per barrel.
Under $20.
Yeah. That's not just good. It positions them almost in a league of their own, suggesting they can weather market volatility far better than many peers. It turns what would be a challenge for others into really a distinct competitive advantage. It's a testament to the quality and cost effectiveness of their producing assets.
That's a powerful statement on their cost structure. Okay, what about industrial and midstream? This segment can often be quite diverse, sometimes a bit of a mixed bag depending on the market.
Yeah, it can be.
Yeah.
But this quarter, this segment delivered a robust, almost surprisingly strong contribution.
Okay.
Now, refining activities saw a slight impact from a brief power outage in Iberia. That was late April. But they still managed to effectively capture the strength in middle distillates, things like jet fuel and diesel during June. But the real story here, I think, for this segment was the midstream trading performance. It was strong across various commodities, but especially gas supply and trading.
Right.
And this was significantly boosted by starting liftings, which, for listeners, that's basically the physical loading and transporting of LNG from the plant onto a ship.
Got it.
From the Venture Global LNG project. They delivered 3 cargoes during the quarter.
3 already.
3 already. So this isn't just about good trading. It marks the activation of a new, impactful, long-term revenue stream for GALP, diversifying their energy mix and their market exposure.
So a long-term strategic bet starting to pay off. And commercial and renewables, that's a segment that's really growing in importance for many energy players looking to diversify.
Absolutely. And the commercial segment performed very strongly. It hit 101 million euros, which is a solid 28% up year on year.
Strong growth.
Yeah, largely in line with typical seasonality, reflecting increased activity as we head into summer months in Europe. And then in renewables, GLP continued to skillfully optimize revenue streams. They enhanced their realized prices through ancillary services effectively, providing stability and support to the power grid.
Ah, the grid services.
Exactly. Things like managing frequency fluctuations, ramping power up or down quickly. And they also brought online 115 megawatts from 2 new solar parks in Spain in June.
Adding more capacity.
Pushing their total installed capacity now to an impressive 1.7 gigawatts. This shows consistent, tangible progress on their green energy transition strategy. Not just building new capacity, but also maximizing the value from their existing assets.
Okay, so with all these robust operational results and these strategic activations, how did this impressive performance translate to the balance sheet and the cash flow? Because that's really where the financial health of the company is fully revealed.
Indeed. And all that strong operational performance flowed directly into a sound operating cash flow.
Yeah.
They saw some unwind from the working capital build from Q1.
Meaning cash came back in?
Exactly. Cash that was previously tied up in things like inventory or receivables was now flowing back into the business. Though this was partially offset by that dollar depreciation we talked about earlier.
Right.
But even despite significant capital expenditures, paying the final tranche of their 2024 dividend, and an accelerated share buyback execution.
So spending cash on several fronts.
Returning capital too. Net debt stood at a manageable 1.4 billion euros.
1.4 billion, okay?
And it's worth noting, over 60% of their activity is held in dollars. So that impacts net debt through currency translation adjustments when reported in euros.
Ah, the FX effect again.
Yeah, but the key takeaway here is GALP maintained a very strong financial position. Their net debt to EBITDA ratio is just 0.5 times.
0.5? That's quite low.
It is. This isn't just healthy. It signals incredible financial flexibility. It means they have significant firepower for future strategic investments, maybe further acquisitions, or potentially even enhanced shareholder returns. A luxury, perhaps, that many competitors might not have in the current market.
These results certainly paint a positive picture for the current quarter. But what about the road ahead? GALP also gave us an updated look at their 2025 outlook, and there seem to be some notable revisions. What are the key takeaways from those upgraded forecasts?
Right, the outlook. Well, despite the volatility, GALP kept their Brent crude assumption unchanged at $70 per barrel, which suggests, a degree of prudence.
Sticking with $70 Brent.
Yeah.
Okay.
However, they did revise their forex expectations, acknowledging that the dollar's depreciation against the euro will particularly weigh on their upstream business, as we discussed. But on the production front, they've actually revised their full-year guidance upwards. They're now expecting a range of 105 to 110,000 barrels per day.
An upgrade on production. Why?
It's a direct result of their sound year-to-date performance and the fact that about half their planned maintenance program is already completed. It signals, I think, a strong level of confidence from management in their operational stability for the rest of the year.
That's a clear positive signal. And for the other segments, particularly given those new LNG volumes in midstream that you highlighted earlier.
Yeah, good question. On refining, they expect full system availability during Q3. Margins are now surprisingly close to double digits, apparently. Though it's important to remember, a large maintenance activity is still planned for Q4.
Okay, so Q4 maintenance still looms.
It does. But the midstream segment, that's where we see the biggest impact of those new LNG volumes from the Venture Global contract. Those weren't even included in their initial guidance.
Ah, so that's pure upside versus the start of the year.
Pretty much. As a result, the industrial and midstream EBITDA is now expected to exceed 800 million euros in 2025.
Exceed 800 million, up from what originally?
Up significantly from their original estimate of 500 million euros.
Wow, that's a huge jump.
It is. And overall, these operational improvements and strategic activations like the LNG have led to a significant upgrade in their total EBITDA guidance for 2025. Now looking at above 2.7 billion euros, up from the previous outlook of above 2.5 billion.
Okay.
And naturally, this cascades down into an improved operating cash flow forecast of over 1.8 billion euros. So yeah, it's a substantial revision. The market will certainly be, scrutinizing how much of this new higher guidance is already priced into the stock.
Definitely something to watch. Shifting gears slightly to strategic developments, we also heard an important update on Namibia, specifically around the Mopane asset. This has been a key focus for investors, seen as a potential game changer. What's the latest there?
You're right, Mopane is critical. And securing a strong partnership for that asset, well, it remains a top priority. It's clearly the next natural and necessary step for GAP.
So finding a partner is key.
Absolutely. And their objectives seem very clear. They want an experienced operator at the helm. They want to ensure a solid long-term partnership based on deep alignment about how to progress Mobeen responsibly and effectively.
Makes sense. What's the progress?
Well, throughout most of Q2, they were busy sharing data with a, let's say, carefully selected list of potential partners, and they've now officially collected non-binding offers.
Okay, offers are in.
Offers are in. And the fascinating part is that these offers have apparently all come from highly credible players in the global energy space.
Highly credible, suggesting major players.
That's the implication, yes. The focus now shifts to meticulously analyzing these offers and charting the definitive path forward. Critically, the progress made so far leaves them feeling confident in completing a partnership this year.
Confident for this year.
What's implied here, I think, is that they're not just looking for a financial partner, they're looking for someone who brings significant technical and operational expertise to unlock the full potential of what could be a truly world-class asset.
That emphasis on experienced and highly credible certainly suggests they're aiming high for that partner, which, as you say, could be a significant value driver. Okay, now for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea based on today's earnings call.
All right. So given GLP's stated confidence in completing the Namibia Mopane partnership this year, and their explicit emphasis on securing an experienced and highly credible operator coupled with the potential scale of Mopane, which seems significant. Here's a thought. A speculative long position on GALP via out-of-the-money call options expiring sometime in Q4.
Okay, out-of-the-money calls. Explain that quickly for listeners.
Sure. An out-of-the-money call option basically means you're buying the right, but not the obligation, to purchase the stock at a price that's higher than its current market value. These options are typically cheaper than buying calls closer to the current price, but they carry higher risk because the stock needs to move up significantly just to break even.
Got it. Higher risk, lower initial cost.
Exactly. The outrageous part of this idea is precisely the timing and the inherent leverage you get with options. You're essentially betting, quite speculatively, on a major global energy player being announced as the Mopane partner in the next few months.
And the plausible part?
The plausible element is the potential for a significant re-rating of the Mopane asset, and consequently GLP's stock itself, if such a high-profile, value-accretive partnership materializes.
If they land a big fish.
Precisely. Especially considering that many analysts believe JLP's current valuation for its exploration assets doesn't fully capture Mopane's potential yet. So a top-tier partner could really unlock that value perception.
But it all hangs on that announcement.
Absolutely. This trade, of course, hinges entirely on the partnership announcement actually happening this year, and importantly, on its perceived quality by the market.
Yeah.
So be warned. This is definitely a high-risk, potential high-reward proposition, not for the faint of heart.
Understood. High risk. Hinges on the news. Okay, so to recap this deep dive then, GALP delivered a genuinely strong second quarter, significantly upgraded its full-year guidance across key operational and financial metrics.
Across the board, pretty much.
And appears to be moving confidently towards securing a strategic, high-quality partnership for its potentially transformational Mopane asset in Namibia. It really does paint a picture of a company executing its strategy with some precision.
Yeah, I agree. This deep dive truly highlights GALP's operational resilience and, I think, astute strategic execution, even amidst this consistently volatile macro backdrop we keep mentioning. They're not just managing existing assets effectively. They seem to be strategically de-risking new ventures like Mopane while simultaneously expanding into green energy.
It's quite a balancing act.
It is. And the question this really leaves us with is, can GLP sustain this balance? Balancing that traditional energy strength with an accelerating green transition effectively enough to truly unlock a new chapter of growth and valuation for its shareholders. That's the big picture question, I suppose.
A very good question to ponder. Remember, everyone listening, this discussion is for informational purposes only and is absolutely not financial advice. We strongly encourage you to do your own thorough research and due diligence before making any investment decisions.
Absolutely.
What stood out to you from GLP's call today? And how do you see their multifaceted strategy playing out in the coming quarters? What piece of this deep dive resonated most with your own understanding of the energy market? We'd love to hear your thoughts.